Good morning, everyone. Welcome to the Mandatory Regulatory Compliance Series for Businesses in Ghana, organized by the UK-Ghana Chamber of Commerce. This is a series that has been going on for the past years, and we're happy to have distinguished presenters from industry, from regulators, to discuss with us compliance issues in relation to pension. The objective of the regulatory series is to educate the business community in relation to compliance required of businesses. So my name is Theophilus Tewia. I'm the managing partner for WTS Ghana. I'm a law lecturer at the UPSA Law School. I'm also a director at the UK-Ghana Chamber of Commerce. And I'm happy to be your moderator for today. Many thanks to the leadership of Ajoba, who is Executive Director for the UK-Ghana Chambers, UK-Ghana Commerce, and the team who are supporting this series today. Today we have the Deputy Director of SNIT in charge of Finance, General Finance and Administration, Mr. Michael Adote-Addo. Mr. Addo is a distinguished investment and finance expert with over 30 years experience working mainly in investment, finance, insurance sectors in Ghana, Nigeria, and the United States. He has worked as Chief Operating Officer and Fund Manager for Data Bank, Agri Fund Manager Limited. He's also been Deputy Managing Director for NTC Limited. He has also been Executive Chairman of Crosswind Limited, Accra, for Western and Southern Financial Group in Cincinnati, and also Standard & Poor's in the United States, in New York City, in the US. He has served on boards of several organizations, including Republic Investment Services Limited, Republic Bank PLC, Global Accelerex Ghana, Ghana International Bank in London, Prudential Bank Limited, First Atlantic Merchant Bank, the Ghana Stock Exchange, and Ghana Industries and Commercial Estate Limited. He's currently the Deputy Director General of SNIT in charge of Finance and Administration. Mr. Addo, you're welcome to our mandatory series. We also have Mr. Kofi Eba Meza Poli. He's the Chief Operating Officer for People's Pension Trust. Mr. Poli has over 2 decades of diversified experience in various social security administration positions in the pensions industry in Ghana, and 5 years experience in the financial industry. He holds a postgraduate diploma in Universal Social Security from Institute of Social Studies, Hague, that's in Netherlands. He has a Bachelor's of Science degree in Mathematics from KNUST. During his tenure as the General Manager in charge of operations of SNIT's informal sector. He has experienced sustainable growth. He was a member of the 3-member team that designed the SNIT scheme for the informal sector. Mr. Addo, let's hear from you in terms of what we expect from tier 1 contribution.
Thank you very much, Theo. Great. All right, so basically in a nutshell, SNIT, what do? We are the administrator of the first year, the basic national social security scheme. That's what we administer, which was promulgated, came into being with Act 766. And we are basically, what we do is to replace part of the lost income of workers in Ghana due to old age, when they retire, invalidity, when they do get injured, or death, fortunately. We also pay immigration benefits. That means expatriates or people working in Ghana, when they're going back to their home country for good, we will pay back their benefits if they've been contributing to SNIT. The minimum age per the law is 15 years, maximum 45 years. So 15 to 45 years, you can join the scheme. Beyond those brackets, you are not eligible to join the scheme. So what do? We basically register employers, workers. The law says every company in Ghana must register. and also contribute for workers. So what we do is we register employers and the workers. We collect contributions and we invest whatever we collect, any excess, we invest the money into investment schemes to provide additional income, because this is a partially funded scheme. And then we process and pay benefits to eligible members and their dependents. And of course, we manage the records of workers and also the companies. Now, basically, before SNIC, there was PNDC Law 247. PNDC Law 247 was the pension fund. Before then, SNIC was basically a provident fund, to put it that way. Then in 1991, PNDC Law 247 came on board and said, okay, employers will contribute 12.5% and workers 5%, making a total of 17.5%. At the end of the retirement, monies are returned to the worker. It was a provident fund. It wasn't a pension fund. And then what happened in 2008, that's when the National Pensions Act 766 was promulgated and passed, and it was amended in 2014 Act 883. That's what actually introduced pension scheme superannuation. So in the pension scheme now, employers contribute 13% and workers 5.5%, making a total of 18.5%. In that law that came, that's Act 2008, 766, not only did it introduce SNIT Tier 1, it also introduced a Tier 2 and a Tier 3 pension scheme. Tier 2, my friend Kofi will talk about it, is the mandatory scheme that is privately managed. And then Tier 3 is a voluntary scheme, privately managed, where an employee can contribute up to 16.5% tax exempt. So in all, the government provided about 32% tax exempt contributions for workers if they want to exploit fully the benefits of the pension scheme. Now, for SNIT, when the monies are collected, that 18.5%, remember the employer comes with 13.5 and employer comes with 13.5 and the employee comes with 5. That 18.5% that is collected is put in a kitty and is distributed as you are seeing on the screen. 2.5% goes to NHI, which is the National Health Insurance Scheme. 5% goes to Tier 2, which is the privately managed Tier 2 scheme. And then SNIT, the first tier scheme, retains 11%. And that's what is used to pay for the pension scheme. Like I said, that Tier 3 is voluntary, fully funded, and privately managed. And for that one, workers can exploit that privately on their own, up to 16.5% tax exempt. Now, as to who must join SNIT, according to the law, every worker in Ghana, that's Ghanaians and non-Ghanaians, are eligible to join. They have to be permanent or full-time, self-employed. Contract employees can do that. Casual workers can do that. Seasonal employees are also expected, as are part-time employees as well. It is quite important that employers comply. Why? Well, besides the law mandating that, honestly, it improves productivity and morale of workers when they do know that their pensions are being taken care of. We realize that it does promote industrial harmony, where you have unions and workers who agitate a lot. When this is taken care of, there's less of that. That's actually controlled. And then it also, of course, projects the company in a good limelight as a good corporate citizen. And we've also realized and come to admit that it helps in staff retention. Among others, it boosts confidence of your other stakeholders when you are transacting business. In fact, it's not even a requirement in certain areas where government will require to find out whether you've been complying and whether you have SNCC clearance certificates. So that also boosts the confidence. And of course, besides being a legal requirement, like I say, you don't have to deal with penalties and charges from SNCC if you do not comply. And you don't have to go to court as the last resort if SNCC will have to drag you to court for not complying. But that's why we really encourage workers or companies to apply. Over time, there's something we've realized completely, that our scheme does provide immeasurable value, and I'll talk more about that later. Besides the clear benefit of old age pension, of course, at 60, we'll provide pension till you die. However, if you should die before the age of 75, if you should, let's say, retire at 60, and you die before the age of 75, SNCC will compute and assume that you've lived till 75, compute the amount and give it to your beneficiaries. So basically what we are saying is that you have a guaranteed 15 years setting in your pension scheme. So that is one aspect that's quite generous when it comes to our scheme. Invalidity pension is something we also pay. If you are working and God forbid you do get injured and you are deemed invalid, you cannot work, the pension scheme covers you. As long as you meet certain requirements, you'll be paid pension till you recover fully or till God forbid you pass on. Then immigration lump sum is something we also pay as part of the law that was passed in Act 883, the amendment. Immigration benefit says that all non-Ghanaian workers who are working in Ghana, if they have to go back to their home country, go back for good, SNCC will pay back the contributions you've made to the scheme with interest. Then, of course, we also pay old age lump sum. Old age lump sum is when you contribute, but at the end of your contribution period, you realize that you do not qualify. You didn't contribute maybe 180, the minimum 15 years. When that happens, all your contributions that you've made will be refunded to you with interest. So those are some of the benefits of the scheme, the highlights of it. So basically, the scheme pays about 60%. How do you compute this? Well, the 11% that you contribute, and every year the contributions that you make, at the end of your retirement, 60 years, SNCC will go back, look at all your contributions, and pick the best 3 years. The best 3 years will be used as the average to compute your pension. And honestly, this is one of the most generous schemes out there. Very few schemes in the world. In fact, there's no scheme in the world that does this. Everybody's now using what we call your lifetime average to compute. SNCC uses 3 years best annual salary to compute your pension scheme. And you have up to 60% of replacement income. The minimum is 37.5%, maximum is 60%. We we index the pensions. So what that means is every year, we'll sit down with our actuary team and we'll do a computation. We'll look at what's going on with inflation and then come up with an adjustment such that the pensioner will not lose so much of the purchasing power, and then we'll index it. This year, we index it to 25%. The year before was 11%. So this is something we do annually. The scheme actually also assumes what we call a longevity risk, where we pay benefits till you die. You retire at 60, and we'll continue paying till you die, just like you bought a life insurance. Then when you die, after 75, we don't cover anything anymore. But if you die before 75, we'll compute the difference and give that to your beneficiary. Like I said earlier, we provide invalidity pension, and we do provide survivor's lump sum, which I just hinted on. And of course, we also pay the immigration benefit. We've realized something over the years, and I need to talk about this briefly that people don't realize, that the SNCC pension scheme does provide superior value in investments. And what we did was, we took data, we took pensioners, and we had full data, 7,600 pensioners. And we tracked their contributions all the way till 60. And then we assume that all their contributions that we are making, if we take that amount of money, put that in treasury bills, how much would that turn out? We noted that. Then we also noted the pensions that we've been paying them all the way till they expired. And we also computed that. And then we realized, it was very clear, that the SNCC pension benefits that we pay exceed the contributions that the pensioner, if they had invested it at 91 treasury bill rate, compounded quarterly, would have received. If you look at 12 years, if we start paying you 12 years into your retirement, that's almost twice what you would have invested. 15 years on is 2.5 times. If we continue paying 20 years, it's 5 times your contribution. 25 years, 17 times. And 46 times for 29 years. We use, of course, the 17.5% of salaries. That's the 247 era, because that's the era that we have full data on. But the numbers was quite staggering. And we like to tell people this story so they understand that the SNCC pension payments really provides superior value in returns. So what are your obligations as an employer? One, you are to register your business and workers within the first 30 days after commencement of operations. Submit your list of workers, their NIA, National Identification Authority, or Ghana card numbers, and SNCC numbers, and the salaries by the last day of each month. So when you do that, you fill a form we call contribution CR. So once you contribute that, you complete that, you submit that to SNCC at the last day of each month. You also must ensure that new workers register with the trust within 1 month after employment. You must update the trust if there are changes in your name, your address, your location, or if you have to stop or suspend business operations. Because if you fail to do that, we'll assume you're still operating, and we'll expect you to oblige in terms of paying your pensions. So it's important to keep the trust abreast or apprised with developments with respect to your company. And of course, the employers, you're supposed to deduct 5.5% from the workers' salaries, pre-tax, of course, at the end of each month, and add the 13%, making it a total of 18.5%. Then you remit 13.5% of that total contribution to SNCC on or before the 14th of the ensuing month. The 5% will go to your tier 2. If you fail to remit or make your payment by the 14th of the month for the past month, you will trigger penalties. And we always try to advise workers to be mindful of that. So basically, you have 14 days at the end of the month. You have 14 days to make your payment. Failure to do that is what will end up triggering penalties. You must inform SNCC within 30 days, anytime a worker is employed or disengaged. And then, of course, you must submit your CR or your contribution report, like I said, by the last day of the month, whether salaries have been paid or not. To submit that, then you have met a requirement. So when you submit and validate your contribution report, you can do that via our web portal. You can come to our office. But we always encourage you, there's no need to come to the office. You can do everything online. Just go online, go to our web portal and validate that. And then you'll be issued, you can print your payment advice and go to any bank and pay. And you would have met your obligations. And then, of course, the last one, you can submit and process your contribution reports at any SNCC branch by emailing the report or visiting the office. The web portal does all of this, and you can do that in the comfort of your office without having to go all the way to the branch office. We encourage that you pay your contributions regularly. Like I said, you can use the phone to do that just by dialing *711 *9#. You have all options in there that you can select and you make your payments. You can visit any of our partner banks. Almost all the banks, besides 2, are partner banks. So you can go and make your payments there. Or if you need, or if you want to, you can walk into any of our branches and make payments. So what if an employer cannot fulfill these obligations? Gentlemen, we really encourage you, contact the SNCC branch manager as soon as possible if you have any challenges and arrange for a resolution. People don't realize that we are really, really eager to work with you and come up with an amicable solution than to end up going to court. Going to court is not, we don't derive any pleasure in that at all. If you, by the 14th, you don't pay, you'll have a penalty of 3% on the unpaid contributions. If you don't meet that, the following month, 3% will be added to that. So basically you have 3% compounding on a monthly basis. And that's why we say immediately you realize that you cannot pay or you are having any challenges, please go to the nearest branch manager, sit down with them and work out some resolution or amicable resolution or negotiated settlement on the payment of your contributions. So let me share with you a few offenses which is avoidable. It's an offense by Act 766 if an employer fails or refuses to register the establishment, fails or refuses to register a worker, makes false statements or representations, and produces false documents just with the intention to evade payment of contributions, and also makes false statement or representation or produces false documents for personal benefit or for the benefit of another person. And all of that, the punishment for that will be the contributions plus the penalty owed to SNCC, and you could possibly end up facing a jail term as well of up to 5 years. Then also there are 3 other offenses where you fail or refuse to submit your contribution payments with a contribution report, the CR, the document that you must submit at the end of each month, which must accompany your payment. That is actually an offense. Similarly, if you willfully obstruct or assault an inspector or one of our compliance officers, if they come on site to do their inspections or discharge their duties, that's also considered an offense. And then lastly, if you refuse to comply with any of the act or regulations, it's also considered an offense. And for those, it's a fine not exceeding 2,500 penalty units. It translates to about 30,000 Ghana cedis. or an imprisonment of 5 years, or both. So briefly, takeaways. As a worker, as an employer, please provide SNIT if there are any changes in your business. Within 10 days, let us know. Inform SNIT of a new worker, or if you disengage one, within 30 days. We ask that you register your business and workers with the trust within 30 days of commencement of operations. And please notify SNIT anytime operations are temporarily suspended within 30 days. That way, we will not hold you accountable for payments, and then we'll work out some resolutions with you. And of course, we ask that you submit your contributions report by the last working day of each month. Make your payment by the 14th of the ensuing month. And then that you comply with all the provisions under the Act 766 or 883. Ladies and gentlemen, I would like to say that you can reach SNIT at any of these times. We are on Facebook. We have all these social handles. We are on Facebook. We're on Instagram. We're on WhatsApp. Of course, we are on the internet. And you can reach us in all these multiple handles. We also have Twitter as well. And we'll be available to work with you, answer any questions, and help you in complying with the law. So on that note, I'd like to thank you all for listening, and I'll be available to answer any questions that you may have. Thank you.
Thank you very much, Mr. Addo, for such an insightful presentation. I'm glad you talked about the penalty for non-compliance. I'm also glad that you talked about the tier 1, that the employer is expected to contribute 13%. The employee is expected to contribute 5.5%. When it comes to remittance of the contribution, the SNIT tier 1 gets 13.5%, and the tier 2 receives 5%. You talked about the fact that employers must update SNIT timelessly when there's a change in operation. I'm also happy to hear about the fact that you think that if there's any challenges on the part of the business, they need to reach out to the manager and arrange for an easier way of settling that obligation to avoid any court action. I'm much pleased about it. I just wanted to find out from you if you could just touch on for foreigners working. I think I missed that point. Foreigners who are here for possibly a short assignment. If you could briefly touch on that before I go to Mr. Polly. Sorry, you're mute. You're mute.
Yes, because all workers are required to contribute, to register and contribute to the scheme. Non-Ghanaian workers are also required to do so. But we do know that some of them are here on short-term contract basis, 2 years, 3 years, maybe 4 or 5 years, some even less. You are still nonetheless required to contribute by, like any other Ghanaians, 13%, and then you can do your tier 2 as well. But when you are returning to your home country, the law requires us to refund your contributions. So when you're going back to your home country, all you have to do is apply. You go to any of our branches and you fill the necessary forms and apply that you are going back, and we'll go into the records, pull all your records, see all the contributions that you've made, and we'll refund your contributions with interest.
Okay, thank you very much. So we'll go to Mr. Polly for his presentation. Mr. Polly, if you could give us an overview of tier 2, what are the compliance obligations for businesses operating in Ghana?
Thank you very much. I'm very fortunate. Michael has done all my work for me because basically there isn't too much of a difference. So what I will do is that I will just go over some of the differences and then also touch on the role of the trustees. Okay, so one, I think that as Michael said, let me give a quick background. This is not, it may not be some, okay, so under PNDC law 247, when a member is going on pension at age 60, the member had opportunity to ask NIT to pay what we then call a lump sum, that is 25% of his what will be taken, or put together. What then happened was that once you take this lump sum, this is money you should have taken in future. So once you take it presently, what it means that will affect your pension, the monthly payments to you. A few complaints came around, and people felt that one, the 25% was not much. Two, they felt they wanted more. And of course, some other state needed some lump sum money to go probably finish a project, to go get into some business and do some stuff. And it is based on that when the pension reform did their work, one of the things they came out was to let's have tier 2. So the tier 2 basically was now taking over the lump sum payment that SNIT will be doing. And that's why now SNIT does the pension, the periodic payment, the monthly periodic payments of your pension, and tier 2 pays lump sum. And as Mike Riley said, so the 18.5% total contribution from employee, 5% comes to the the trustee who is now managing the tier 2. Now, another thing that I want to bring to attention is that SNIT, as Michael said, their age is 15 years to 45 years. With tier 2, it is 15 to say 59 years. The reason being that SNIT operates what we technically call a defined benefit scheme. And if you remember, Michael explaining how they calculate their pension, talked about the number of months you contribute as a factor. Now, by law, it should be an aggregate of 180 months, that's 15 years. The danger here is that if the person is after 45 now joins the SNIT scheme, obviously cannot meet that condition, and therefore it makes it difficult for SNIT to now work and pay that person pension. And so now the law says in that case, when you're above 45, then all the 18.5% should be paid to your tier 2 scheme, which the corporate trustees now handle. Quite apart from that, we also offer the same benefits. Old age, ours is lump sum. The interesting thing is that the industry is developing, and what we are currently doing, for example, if you come to pension trust, we have an arrangement with 2 insurance companies, where when you want to take your lump sum, we can sit you down with the insurance company, who then will offer you annuity. The essence of the annuity is that now they more or less ensure your investment and say that based on the money you have, we will take that money, and on a monthly basis, we will pay you a certain amount over a certain period. What that does is that people don't take the lump sum and then mess it up. I mean, let's face it, all of us, when we get, very few people are able to manage money when they get it lump sum or there's a windfall. So that is what otherwise, by law, we are supposed to pay lump sum for the tier 2. We also have invalidity pension, where through an accident or sickness, the member cannot work again, then we pay such a member a lump sum. And then of course, we have the death and survivors benefit, where if the member passes, then the beneficiaries, we pay this money to the members and beneficiaries. So we do all that. Again, just as SNIT, we also need your contribution report to be able to accredit the individual accounts. In fact, the contributions are very important. That's why the law even makes it an offense if you fail to submit contribution reports. And similarly, if you fail to pay on time, like the 14th day of the ensuing month, the same 3% penalty is also charged by tier 2 schemes. And so we basically, in terms of that, we do the same thing. The only difference is how we go about our business. And if you see from the slides that I have, the slide I've put up, just one slide. In our architecture, we have three parties playing that role. We have the corporate trustee, we have the custodian, and we have the fund manager. Now, basically, the corporate trustee is the key. I mean, he's I call it the midfielder. He plays the central role. And so the corporate trustee is one supposed to come out with an investment policy that will allow the corporate trustee to invest this in allocations. And they also appoint the custodian and then the fund manager. And of course, they evaluate their work and also deal with the administration of the funds. So basically, when you start administration of the funds, managing the data, paying people's benefits when it is due, and all that, registering people. These are the things that, as a corporate trustee, that we do. The other difference is that whereas mates, they are equipped to do everything in-house, we have a custodian. And so the custodian is basically a bank, registered the Bank of Ghana, and has a license from NPRA, National Special Authority, to hold on to the assets of the members. And by that, I mean the contribution that the members pay. So whereas in the case of SNIT, you can go to any bank that they have an agreement to pay. In the case of a corporate trustee, we can only appoint a one custodian bank. And so our members are supposed to go to this custodian bank with their contribution schedule and make payment. So the custodian now holds the assets. The fund manager, being appointed by the trustee, is also the one that advises the trustee to invest these funds. What we, for example, we do at Trust that even though we are supposed to appoint this, when we sign on institutions, we come together and agree. And for fund managers, we can even have one or more. So we then sit down with you and then agree on the fund manager you think would serve your interests. So this is what basically a corporate trustee does. Quite apart from that, we do basically the same thing as that. We also pay immigration benefits. So if somebody, like Michael said, is in for a short time, this expatriate, he's going, we have to look at your necessary document that actually tells us that you are leaving the shores of Ghana, and then we pay you these benefits. Now, when it comes to the investment of the funds, there's a regulation, a very strict regulation as to where and even the allocations of the funds. So basically, we do the same thing. Let me quickly add the Provident Fund. So you have, the law says that you have 35% of your income, which if it's going into any pension scheme, will be tax exempt. Now, tier 1 and tier 2 takes 18.5%. And so you are left with 16.5%. This is where then people can then, or employers can then take advantage and have a provident fund with their workers, and then some of this 16.5 can be paid into the provident fund. Also, we operate personal pension schemes. So the personal pension schemes, you can still take advantage, and once it's being deducted from your salary, and of course it means that it will be tax exempt. Now, the thing that Michael talked about, an employer or an institution paying all this and so obliging with the law are true. It helps in staff retention. You're able to keep your staff. There's harmony. There's no noise here and there, staff agitation and all that. So all these things are very true. And of course, the reason why the law allows both the corporate trustee, tier 2 and tier 1 SNIT to charge penalty is that if we take this money, we are supposed to invest it and the returns goes to the members. And so if the employer keeps those funds, then the employer is more or less denying the members or the staff of their necessary investments. And therefore, we must charge a penalty to make up for what the employer is keeping, especially so when it comes to the tier 2 schemes. Because tier 2 schemes technically is what we call the defined contribution scheme. With this type of scheme, we are not so much interested in the frequency of payment. There isn't that kind of solidarity that you see with the SNIT scheme. Here, it is your amount, your contribution that you have made, plus interest accrued, that is important. And therefore, if the money, the contributor does not get to the trustee early enough for them to do the investment, then we are shortchanging our members, or for that matter, the employees. Thank you very much. I guess I'll end here, very short. And I'm sure as the questions are coming, we may go into a lot more. Thank you.
All right, thank you very much, Mr. Polly. So we'll go to the questions. And my first question will relate to what will be the definition of who is eligible to pay pension contribution. Mr. Ado talked about casual workers, talked about part-time workers. So could we have what the definition of a worker is as a starting point? Because there's much controversy in this area. I know how SNIT defines worker is different from what the labor law also says. So if you can have your comment on that. I don't know whether it's something that you are okay with.
Yes, I think your question is now leaning towards the act. So just give me a moment. I'll take a second break. The act is beyond my reach. I'll try and reach it and see if we can pull out the definition of a worker. But basically, from our experience, a worker is anyone who works here, who is gainfully employed and works. And I thought I had defined by telling whether it's casual, part-time, full-time, and all that. Those are all considered the various types of workers or status of workers that are considered workers. But as to the clear definition, I will have to refer to the act to see if I can quote that.
No, I'm saying that because I can't really recall vividly, but it makes the point that the person must be a worker of the establishment. And when it comes to persons who are casual workers, they have been engaged momentarily to assist with temporary work. And so some of the view that because they're not part of the establishment and because of the quantum of the money, they may not be eligible to pay pension contribution. And that's been an area that most employers always struggle with. So I wanted to have your professional view in respect of casual workers particularly. I mean, there's no problem when it comes to permanent staff or fixed-term worker, but the gray area relates to persons who have been engaged specifically for a short-term assignment, which is of seasonal nature.
I experienced that seasonal workers and casual workers are also eligible to contribute, and their workers must pay on their behalf. The question then becomes, what is part-time? And there's been a lot of debate in the courts. One of the person is putting in hours, and it meets minimum hours that's required. I think, if I'm not mistaken, 22 days in a month, if you compute it. That person, contribution must be made on behalf of that person. There's been a back and forth with lawyers on that, but it has remained steadfast. And that's why I came out and pointed out that casual workers, part-time workers, temporary workers are all eligible to join the scheme.
You, Mr. Polly, do you want to have your right on that?
Yes. Quick one. So basically, once there is employer-employee relationship, we have a worker. But then, of course, we also have self-employed or the informal sector. They are also workers, all right. Now, with what the casual thing, it was realized long ago that some employers were taking advantage of this casual thing to then shortchange people that they take on. Mm-hmm. And that is why even the labor law came out to say that after a certain period, the person automatically becomes a permanent staff. And previously what we were doing was that you come and work for 6 months, he lays you off as a casual worker, so he's not paying anything on your behalf. After a month or two, he brings you back another 6 months. And that was not fair to workers. And let's not forget that what SNIT, for example, is saying is that it is the aggregate number of months that you contribute. It need not be continuous. So if you are going to take the person 6 months, 6 months, 6 months, yes, then the person can eventually meet the aggregate number of years to qualify him for his pension. So the law was quite categorical. That look, there's nothing like a casual worker when it comes to SNIT contributions. And even derived it from the labor law, which also ensures that this idea of employing people piecemeal for a period, they go and sit home, they come back and employ them, is also dealt with. And so when we, in the pension industry, when we say a worker, one, there must be employee-employee relationship. It may be formal or informal. I mean, for example, if you own a shop and you get somebody to come and assist you, you aren't going to say that because you're not giving the person maybe appointment letter, then he's not a worker. You are paying the person remuneration anyway. And then, of course, we have a sharp divide where we have the informal sector who are basically doing their own thing, but they're also workers. They earn income. And it is important that they also secure their future. I mean, their income security is secured in their old age. Thank you.
For the answer. My second question relates to how we determine the contribution. Should the contribution be on the basic salary or should be on the total cash emolument that the employee is getting? I know in practice, most employers would calculate the pension contribution on the basic salary. I mean, what is the official position of the regulator?
Well, let me tell you, basically, it says the salary, but that's where the debate goes on. Truth be told, it should be total salary, total remuneration, emoluments for the worker. What is happening is that if you don't do that, you are invariably shortchanging your worker. If you end up giving your worker, you can say, well, yeah, listen, your salary is, I'm just doing out 10,000 cedis. There you are, 10,000. By the way, all your allowances comes up to an additional 15,000. Take that one and go away. And then you go on and you compute just on the 10,000. To you, yeah, you have to pay only 13% of that, right? So you think you are doing good, but you are shortchanging your employee, because at the end of the day, you realize that the employee will end up going home with less pension than if you had paid the employee based on total emoluments. Because your computation is based on certain things. One, how long you've contributed for, the duration of it. The quantum, how much you contribute. The more you contribute, the higher your pension. We do have someone earning 169,000 Ghana cedis a month. And we have someone earning 300 Ghana cedis. Well, now 403 or something like 483 Ghana cedis a month. And all because not only the duration, but the quantum. So we always tell workers, employers, and workers, make sure that it's your total emoluments that is used to compute for your contribution.
And thanks for that. But practically, you will notice that that is not what is being done. When audits are carried out by SNIT, they validate the basic, which is a sharp contradiction to what salary has been defined by the National Pensions Act. And so we will say that SNIT has acquiesced. SNIT has never issued any statement in respect of how the pension should be contributed, should be deducted. And by industry practice, it has always been on the basic, even though the law says that salary includes emoluments on other things related to the employment. So if the regulator acquiesced, we will go by industry practice. It's my understanding Correct.
You might say something, but let me say this quickly. By the way, we are not the regulator. We are regulated by the NPR. So the NPR will be depending on workers on that. But yeah, you are making a good point. You see, there were in the act, there's this gray area because it has not come out to categorically say everything that you pay staff should be used to compute. So people are getting up and say, oh, we all use salary. The law says salary, so I'm just giving basic salary. And fine, you can do basic salary, but we are telling you in practice, in practicality, in so doing, you are invariably shortchanging your work. You are. Yeah, you can go by the law and say, yeah, basic salary. It's true. And no one will fault you for that.
Yeah, if I may add, I think Michael looked at it even from the employer angle. But I think that you see the difficulty for us is that when the person you are seeking the interest is also part of the whole scheme, it becomes difficult to check. So, for example, what employees should also understand is that, let's look at this in a very simplistic manner. The employer is paying 13% of your salary, and you are contributing 5%, 5.5%, employer 5.5%. Now you notice that the employer is paying even more than a double of yours. And therefore, if you think that you are being smart, and the employer says, the example Michael gave, I'm giving you 15,000, but look, because of SNIT, who will take your money, I'm giving you 10,000 and I'll give you 5 as an allowance. The employer is actually shortchanging you, the employee, because then his 13% is going to be lower than he should have paid. And as Michael rightly said, when your pension is being worked, you work it backwards. Because based on what you paid, that's how now your best 3-year salary or your salary will be calculated. And so, yes, I agree that we have a lot more to do. And this thing I can tell you started way back the 90s. At that time, what Smith was saying was that instead of saying salary, let's even say consolidated salary, because people were then taking allowances here, allowances there. So even before the pension reform, it has always been an issue. And like I said, the main challenge is the employees also assisting the employers to do this. Then it becomes very difficult. And you see, what can you check? You can only check with their tax returns. And if the tax return shows that this is the remuneration, this is allowance, it becomes difficult. And like Michael said, because again, the law itself says salary and was not really defined, it's becoming an ongoing battle. But my advice to every person is that, or every worker is that, in the long run, you must seek your interest. And if you notice that the employer is even contributing more than 2 times what you are contributing, then you should not think that you are playing smart by taking some allowance and reducing your salary. In the long run, you will be losing out.
Yeah, thank you very much. I mean, I think the employer is taking advantage of the gray area to the advantage because of business cost and all that. So the regulator, it will be good for regulators to issue similar practice direction so that employers can follow suit. Otherwise, employers will take advantage of the gap in the law.
Sorry for interjecting. You are right, but there is a reform. There are some efforts are being made to introduce some reforms. In the act, there are a lot of gray areas and areas that are quite obscure, and we are coming up with reforms that will clearly clarify all these areas and avoid these ambiguities.
All right, thank you very much. So let's go to other questions we have from the panel members on the call. So someone is asking, I think, about what's the procedure for expatriates who currently outside Ghana but are pursuing their contribution. Can he mandate someone to do an application on his or her behalf? I think that's the first question. Second, so let's pick it one after that.
I was just about to type to that. I've typed to a response to the first one. For this one, yes, the individual out there can apply. he or she must contact SNIT and give the information, the necessary information, his name, the social security number or NI number or whatever particulars that we need. And then that will start the process. Now, you cannot mandate someone to do that for you. They can follow up on some of those, but they cannot because it's a beneficial. We don't disclose certain things to everybody. So you, the person out there, may end up having to do certain things. One, we have to be sure that you are who you say you are. So there will be some validation either at your embassy or Ghana embassy, also some sort of validation that must come back to SNIT. And then from there, the computation will be done. And then an account will need an account. Ghana pays Ghana cedis, not foreign accounts. So we'll have to put the money in an account here somewhere for you. So all those details can be worked out with SNIT. But first, you must initiate your interest by applying, and you can do that by contacting SNIT, and they will ask you, they will request for some details from you, and then we can start the procedure.
Mr. Ado, would it be okay for a power of attorney to be given to someone, especially when the applicant has already completed the forms?
Would it be okay if what?
The person has given a power of attorney for anyone to just follow through the process, because normally an expatriate cannot wait for the process to be completed. So they just sign off the paperwork and they leave the country. Then someone is doing the follow-up, either a lawyer or someone they trust. So but by way of power of attorney, would that be a good step?
That power of attorney has to be solid, very solid. We are talking about pensions here and or pension benefits. So yeah, the immigration desk can work with that individual on that. Yes, power of attorneys have come in before, and the power of attorneys will be expected to be written in a certain way to avoid any ambiguities or any legal issues.
Thank you very much. So go to the next question. Someone is asking about when a person changes his job, how do they ensure that the previous contribution to tier 2 are transferred to the new employer? So that will go to Mr. Polly.
Okay, thank you very much. So it will not go to the employer per se, but the thing is that because we have quite a number of trustees, every employer decides based on their own analysis to choose a particular corporate trustee. But it's very simple. The law allows for what we call porting. And I advise people that when you move from one job to the other job, check if they are using different corporate trustees, then port your funds to the new corporate trustee. Of course, you can decide to leave it where it is. But my point is that at the time when you are old and you are not very active, that's not when you want to be visiting offices dotted all over the country. So it's very simple. All the corporate trustees have a form. You just fill the form to the new corporate trustee and leave it to them. They will then handle it. So for example, People's Pension Trust, we give you a form to fill, then we take it up. And so when the funds come, if I leave it before the funds will come, we'll show you the statement account that has been provided us from the other trustee. You accept the funds come and we credit your account, and you see it in real time that your accounts have been credited. And so it's very simple to go to the next corporate trustee. All right,
let's go to the next question, which borders on a family member passed on, and upon inquiry, tier 2 personnel insists that we must acquire letters of administration before we can retrieve the money. I think I can answer that for you. Can I answer that?
Go ahead and answer.
I think per law, you have to, when someone dies, his estate cannot be distributed unless you obtain consent from the court. And consent from the court is usually in the form of letters of administration if the person never left a will. If the person left a will, then you have to obtain probate. That gives you the legal right for SNIT or any other authority institution to entertain any application you may have. So that's a legal matter. So we'll pass by our presenters.
So let me quickly add something. It is probably not that straightforward. You know, there's something that we call beneficiaries. For example, if you join SNIT, you'll be asked to give your beneficiaries. Tier 2, you give your beneficiaries. Of course, you can always come and change your beneficiaries. Now, the beneficiaries serve like a will. So you are saying that for my pension funds, these are the people I'm giving to. So technically, you don't really need a letter of arbitration, because even the person who is coming to make the case, at that point, is not even sure whether he's even part of the beneficiary. You make the case, we will do our investigation, and we will go to the people who have been nominated, and these funds or pension funds will be paid to the beneficiaries as percentages allocated to them. So when we register you, just as mentioned that, they will tell you that, okay, of course, we don't know how much, but let's make it 100%. If you have 4 people, how do you want to distribute the 100%? If you have 2 people, how do you want to distribute the 100%? So based on that, then these funds are paid to the beneficiaries.
Okay, Mr. Polly, let's take the other question. There's a question, but is there any cap on income of the employee to which the basic rate applies? That'll go to Mr. Ado.
Yes, that's called insurable income, 42,000.
Yeah.
That's the current threshold.
Yeah.
So what about if the pension relates to a previous years?
Previous years was not up to 42,000, so you would have passed.
You have to apply the previous threshold at the time of
yeah. Right now it's 42,000.
Yeah.
Yes.
So let me give a bit of a history. Previously there was no cap, and what some people, especially the self-employed, were doing was that he pays some small amounts, and then getting to his 55, 50 to 60, he starts balloting his salary, because of course you use the 3 years, best 3 years to calculate. So before you say Jack, he has ballooned his salary and is coming for a huge pension. Of course, SNET will always go and litigate. But if the person is able to demonstrate that he paid tax on that salary, there's very little that SNET can do. And so in the wisdom of the reform, then they came up with a cap. That look, we are capping it at this point. So, and the cap is not, it changes periodically. It changes periodically. I think last year was about 35,000. And now it's gone to 42,000.
Now there's a bit of a funny thing going on, but I might as well tell you. What if what if a work has multiple jobs? Maybe 3 companies. Works for 3 companies. A mining company, consulting there, and maybe another marketing firm. The first one meets the 42,000 of insurable income. The 13% 42,000. The second one also meets the 42,000. The third one also meets the 42,000. So what do? Do we take only the first? But what if the second person is also paying? They have to pay salaries, right? They're also paying, and they're saying this is a contribution. Do we not take it? This was debated for a long time. And so we concluded we are taking all.
Yeah.
When you are retiring, we'll refund all of that with interest. We'll take the first one, yeah, you've met your 42. And when your second and third are contributing, you take it. So you've met your obligations. But then we'll note that you've exceeded your maximum insurable income. So that 42,000 will be a credit to you, and all of that will be part of the exit.
Thank you very much. There's a question in relation to whether Tier 2 attract penalty like SNETs. Is there any penalty, any court action being taken by the trustees in relation to non-contribution? Because everyone's attention is on the Tier 1. Any penalty regime in relation to Tier 2?
Yes, there is a penalty. We charge the same penalty, 3% per month for defaulting. Unfortunately, and I'm using it advisedly, we refer to all our court issues to the regulator. So if you default, every month we send the defaulting establishments to the regulator. They then take it on. First, they will serve you a letter. If you fail to comply, then they will take you to court. So yes, we also take them to court. The only difference is that the corporate trustees, the Tier 2, we go through NPRA, and for SNET, they do it themselves.
But how would you able to know the relationship between contributions that have been made to SNET and contributions that have been made to Tier 2? Because yours is just 5.5 of the total 18.5. So you may not have information as to what an employer is paying unless you do a positive relationship between the total funds be managed by SNIT and what's actually coming from your end? So it leaves some employers off the hook.
No. I mean, we basically, because we also go and inspect the same books that SNIT will inspect. So just as SNIT have compliance officers, we also have our compliance or relationship managers. And so we come and also inspect your books, I mean, your salary structure. So how did you get a 5%? Is this amount that you are paying to the person? So we also do that. One good thing is that all of us, and I know SNIT does it, we all at the end of the month submit all these information to the regulator. And the regulator matches everything. So because we are using, even before the advent of using the Ghana card, we were using SNIT numbers for the tier 2, just as SNIT was using the SNIT for tier 1. We were mandated by the regulator that when we are submitting these reports, we should include the SNIT number. So the regulator is able to match each individual and your tier 1 and tier 2. And in fact, I know they have flagged a few issues concerning even like this age we are talking about, where somebody is above 45 and started paying as SNIT and mistakenly they took it, and then they'll flag all these issues. So there are ways of which I must say the regulator has picked up in recent years and doing a very good job. But yes, the basic thing is that we all look at the basic document that is giving us the contribution schedule. That, of course, indicates the 5% that is being paid out of the 18.5%.
So there's a question about can a person do personal pension contribution after having exhausted the total 35%, which is tax deductible?
The answer is yes. And in fact, one of the things we do is we encourage every worker to also do a personal pension scheme. You see, if sometimes we don't pay very much attention to what SNIT tells us, you realize that beginning of Michael's presentation, he says SNIT was offering the basic. And so SNIT offering the basic, and even went on to explain that you take about 60%. So let's do a simple calculation, a very simplistic one. Assuming your best 3 years, it comes to monthly 100 Ghana cedis. What the law is saying is that you now on your pension, you're going to take 60 cedis. Now, this is you who have lived on 100 cedis for the past maybe 5 or 6 years. And then suddenly, you are now going to live on 60 cedis. So there's a gap. Now, the interesting thing is that, unlike the developed countries, in Africa and especially in Ghana, when you even go on retirement, your expenditure goes up. Because immediately, you are paying your big uncle. When previously you're not attending any funeral, now you go. And when you go, they expect something from you. People are coming to you. So you see that even though your pension compared to your salary has come down, your expenditure has gone up. And that is why it is important to have the tier 2 and then your personal pension scheme to help make up for this gap. And it is very obvious that, look, SNIT continuously says that they are offering you the basic. And so when I hear people complain, I'm like, 1, what is your salary? And 2, you have already been told what it is. And so it's very important. In this particular case, what will happen is that since it goes beyond the 35%, then tax will be applied before it is deducted and paid to your personal pension scheme.
So, Polly, we also want to know what are the investment options available to the tier 3 pensions, tier 2 pension scheme, and how businesses can make informed decisions regarding their pension investment.
Yes, so it is. We have a very strict investment guidelines. Unfortunately, I can't pull it out, but on top of my head, it's very strict. The guidelines tells you where to invest and even the asset allocation. So, for example, government bonds, money market, stocks, and then now we have 5%. And all of these should be in a certain percentage. And now we have 5% that you can invest offshore And so it is a very strict investment guidelines. So for example, the trustee cannot say that I have funds, I'm therefore going to give a loan to an individual or a company outside these guidelines. You can't do that. And that is why I think that, if you ask me with my experience, the Ghana architecture is one of the most secured pension architecture I have come across. Because you see, all the funds go straight into the custodian account. Into the custodian account, the only time the funds come out of it is when you are investing or you are paying your members their benefits. Now, when you are investing, the fund manager advises you, you accept it, then you also advise the custodian or instruct the custodian, who then will purchase the investment on your behalf. When the investment matures, it comes back to the custodian. So you, the corporate trustee, you don't even, you see all that you see is you see it on paper. And if you even instruct the corporate trustee, the custodian to do a shady business, for lack of, let me call that, so outside the guidelines, the custodian will not budge. Because apart from the corporate trustee monthly sending reports of its investment to the NPRA, the custodian also does the same. And the fund managers also do the same. And therefore, when all these three reports come, they must, of course, make sense to the regulator.
All right, thank you. The next question borders on foreign employees who are working in the country. They started talking about the fact that they have to contribute. Are there any exemptions for them, for foreign workers who are here for short assignments?
There are not much exemptions. I think, if I'm not mistaken, 6 months. I can double check. I think 6 months, but or 3 months. I have to double check. But beyond that, you are required to do that. But if you can show that I'm just here for 3 months or so, that's fine. But beyond that, you have to.
Okay. Thank you, Mr. Polly. Do you want to have a bite?
If I have a bite, I will sound very controversial. So if you want me, I'll do.
Okay.
Look, I think that, look, even if you are spending 1 day here, we should take it. My reason is simple, and you know it. When you go out there, over there, and you want to work, if you don't have a social security card or number, you cannot work. Therefore, what can you do that they will come here and be able to work without these numbers? The other side of it is that all over the world, is pension funds that are used to develop countries. And so we should also not allow them to come and say, because I'm coming, I'm spending just a few time here, I'm going. Look, if you go there, they won't accept it. Why should we accept it here? We shouldn't accept it.
Eva, isn't that the case that because possibly they are paid on a weekly basis, but in our case here, it's more formalized employment? Because I know that regulator has issued certain circumstances under which a foreigner is not expected to contribute to SNIT contribution. And what I know, first one is that they are here for a short-term assignment, which is not exceeding 3 years. And there's evidence that they're making similar contributions in their country.
Yeah, if I may come in here, like I said, I thought it was 3. I think the 3 years is if you can prove that, yeah, you are making the similar contributions.
That's correct. That's correct.
Over there. If not, you will have to contribute. Now, like I said, I really wish I had, because when it comes to these things, it's very important that I make my pronouncements right, so that I don't appear to mislead people or for others to misconstrue what I'm saying. But unless it's categorically stated and or unless you're giving complete a clear exemption, you are required to comply. Okay,
thank you. Let's deal with the issue about prosecution by SNIT. Many times you get a letter by SNIT asking companies to appear before a criminal court on a Saturday. my question is, how should businesses
Yeah.
navigate this court issue? For most of these companies are either dormant companies who are not in operations, and you see a wholesale letter written to them. Very few occasions that you would have entities that are in operation being asked to appear before the court. So my question is, how should businesses manage this risk of facing a court action, criminal summons from SNIT?
Okay, that's a good question, but let me go back. You recall in my presentation, I said, keep SNIT apprised of the status of your company. When you change location, change operations, suspend operations, close down, keep SNIT apprised. Failure to do that, we assume you are operating. When we assume, because contributions are not coming, we'll also assume that you are not compliant, and non-compliance means we'll take you to court. That's one way. The other way is we'll come and do an inspection. And when we come and do an inspection, we try and check what the inspectors say with what we have on our books or what you've been contributing in the past. And in that we see that there's an issue, there's a gap, we try and seek resolution. Going to court is the last thing we do. It's the last thing. We are not interested in going to court. We are actually forced to do so if we don't see any progress, if we feel that nothing is happening. But if there's an issue, I urge all employers, talk to SNIT, call the branch manager, go to the branch office or the area office, sit down with them. They will work something out. Going to court is the last thing. We don't want. We don't derive any pleasure. But if you don't, that's what happens. Usually go to court when you've not complied, if not paid your contributions, or you have liabilities. You are working, but you've not been paying your contribution. You've skipped it, and you've not come up with any negotiated settlement. And we've made several efforts to retrieve, and we're not making headway. Then SNIT will go to court. If SNIT has tried several times to track you down, they can't. We'll assume you are being elusive and you're trying to avoid paying taxes, non-compliance. If we can't reach you, if we can't arrive at anything, then we'll go to court. And all of this can be forestalled. All of this can be prevented if employers contact SNIT and keep SNIT apprised in issues. If they're having any challenge, it can be resolved so that we don't have to go.
So we have a question in relation to when are we expecting to receive a release of reforms and the policy guidelines that you talked about. When should we expect to have that?
Oh, that's a good one. It will take time. I will tell you that. It will take a bit of a time. Let me tell you. Let me just give you a short how it will take. Besides SNIT is done, SNIT comes up with the paper. SNIT will have to take it to the minister in charge of pensions. Minister in charge of pensions will have to take it to cabinet. Cabinet will have to consider it, then maybe take it to Parliament. Parliament then, because it's an act, Parliament then will have to look at it. There will be a lot of debates. They will form up committees and all that. Then there will be stakeholder engagements, because don't forget it's tripartite. You have to get the pensioners involved. You have to get the workers involved, TUC, and all other interest groups. So there will be a roadshow on this. So a white paper will come out. There will be a roadshow. So I can tell you can take. I don't want to stick my neck out, Kofi, but I would say 2 to 3 years.
Okay, I'm glad you talked about the stakeholder consultation. I think that's a very important exercise. That should even start out before it goes to Parliament. At least once you have the draft bill, a continuous engagement with the employers, workers, pensioners will be much desirable, because we are the ones who are going to contribute. So don't jump the steps. Please get us involved.
Oh, yeah.
Yes.
There will be involved. Who will be done without stakeholder engagement? Nothing.
All right. So my other question relates to automation of your process. I know you're very proactive. Now we do validation by emails. Then we work to banks to make payments. I mean, what developments are you doing to avoid employers having to go and do validation, which may take the officers quite some time before you get the validate a report, then you have to either go to bank to make payment. What steps are we doing to automate the process so that just by a card or just by bank transfer, we can make payment? I know during the COVID time, once you make online transfer, you have to physically go and show your bank statement, your pay slip before it will go to the process. So automation process is very key. And I want to understand what steps are you taking to ensure that from the comfort of our office, we can make all these payments without walking to a bank.
A lot of work is being going on. In fact, a lot has gone on. You can actually validate from the comfort of your office, and then you'll be issued a payment advice. The payment advice it's a confirmation that has been validated, and with that, you can make payments. And if you have an arrangement with your bank, you can still make payment from there, scan your payment advice, depending on your relationship with the bank, and make the payment without stepping out. You can do that. You can also pay via the phone if you have some arrangements. Some have standing agreement with their banks, such that they know what the CR will be unless there's a change in the number of workers or salaries. They know what it will be for the next 3 or 4 months, and they work with their banks so that payments will be done almost automatically by the 14th. So efforts are being made. We are still working to even improve that. In-house, we are doing some systems with actually, I think we're done, almost done, where now you can use Momo. You can pay with Momo. You don't even have to go to a bank. You can use your phone and pay and pay that. And a lot of the banks are working with us whereby they want to embed or insert their platform onto the SNCC platform so that workers can just go log into their bank and make the payment seamless. So all that efforts are being made, and those are back office efforts that are being made. And when it's done, of course, it will be brought to the front office for employers and employees to see for themselves.
Very well, and I just need to do more, because now the fintech space is doing accelerating faster. The last time I tried the Momo option, it never worked, and so maybe we should find a way of integrating the payment. Yeah, we should integrate the payment platforms.
I'll take your details and get somebody to talk to you after this.
No. I mean, it's been resolved.
Why it didn't work and how it can be resolved? Because I'm surprised.
We go to the bank to get it done. The last time I had to try the Momo option, and never. Yeah, so I have a good relationship with the Legon office, but the last time I was trying the Momo option, it never worked. Let's take a few questions and bring the curtain to a close. What is happening in the remaining amount? I think they're talking about the cap. So if a person is being paid more than 42,000 cedi, what happens with the excess salary of the person? He wants to know, how should that be treated as well?
We don't take it.
Okay.
Simple answer. We don't take it. It's capped at 42. When you're computing, stops at 42. Your insurable income cannot be more than 42, and we don't take it. If you're working for different companies and they are coming to pay, they will still pay based on your insurable income of 42. For that one, we will take that. But for the same company, one company exceeding 42 insurable income, we don't. The system will not take it.
Okay, so when a person is at the age of 60 years, do you normally make a lump sum payment to the person, or you pay the person on a monthly basis till the person dies or something?
No, it depends on if you qualify. The basic is 180 months. That's 15 years. If you, at the age of 60, you've contributed for only 14 years, you don't qualify for a pension. So your minimum rights of 37.5, you won't get it. So for that, we'll take all your contributions and refund it plus interest. So you turn 60, if you don't meet the minimum requirement of 15 years contribution, you cannot earn it. So we'll have to pay your money back to you in lump sum.
What protection do workers have when they have disruption in work? So because they lost their work, they're not able to contribute to the maximum or the minimum amount of contribution required under the pension scheme. Because somebody may do 5 years and may not have job for another 5 years in that order. So what kind of protection do such workers have when they have not met the 15-year threshold?
Unfortunately, Ghana, one of the things Ghana doesn't have is unemployment benefits. And this is a classic case of that, where you are working and you lose your job, and you can go to unemployment. It's a type of benefit, it's a social benefit, and you can get it. Ghana, we don't have that, we have pensions. So it's unfortunate that when you're working and you lose your job, for that, we don't have any, we don't have it. SNCC does not cover that, let me put it that way. SNCC does not cover that. And for that reason, I hate to say that if at the end of at age 60 we do our computation and we compile all the data and you don't meet the minimum 15 years, you will not qualify for pension or superannuation, but you will qualify for a lump sum, old age lump sum.
Okay, all right. So we'll go to where our money is invested. We make these investments. I know I grew up in a SNCC flat, and that's a laudable idea. So for now, where our money being invested so that we can have maximum protection at pensions, because the idea of Adenta SNCC flat, the Dansuman SNCC flat, the Takrady SNCC flat is a very laudable idea. So where our money being invested to have maximum return so that when we go on pension, we don't have to come and queue in commercial banks and other banks.
Yeah, that's a good point. Your monies are invested well. SNCC invest in a few areas. One, we are in the listed equities market, stock exchange. We are unlisted equities. That means we have interest in some companies that are not listed. We also are in properties. We do have properties that we've invested in. Some of these high-rises you're seeing in Accra, that's SNCC. SNCC actually started that. It went into that market, set it up, and now the private sector has come in. So a few of those high-rises, that's SNCC. We have a couple of private equity investments, foreign-based private equity investment. We have a couple of that. What else? And if I have to go to, those are just largely the areas. If I have to go to the industries, if I have to go to sectors, I would say we have hospitality, the hotels. For example, Labadi Beach Hotel, La Palm Hotel, Elmina Hotel, Buzua Beach Hotel, Royal Ridge Hotel. These hotels, SNCC owns them. If you look at some of the properties that we have, the high rises, the Ridge Tower, Heritage Tower, SNCC Emporium, the Pyramid Tower. These are some of the high rises that we have. We also have real estate investments with other partners. Klagon. If you go to Sakumono, we have properties there. Committee 13, we have Eagle Nest properties there. And a few other real estates that we have with other partners. Yeah, on the listed equity markets, we are heavily involved. Once upon a time, we're the majority, but now we've gone down. I think about 11% now on Ghana Stock Exchange. We're in most of the banks. So we play a pivotal role in that, right? It's good and bad, I guess, because if you have such substantial thing, you cannot move easily. Immediately you try to make a move, you're shaking the market, and that affects things. And maybe that's the problem we have to deal with. So your monies are invested, and our investments are based on strict revised asset allocation policy and guidelines, which was approved by the board. It was revised in 2019, and updated. And that's what's guiding all our investment guidance. And then last but not the least, we also have investments in treasuries to meet our short-term liquidity needs. So in a nutshell, high level, these are areas where some of your investments are.
Thank you. Mr. Polly, there are concerns that the tier 2 is not properly managed in terms of asset allocation. And that concerns have come up in certain quarters because SNIT is government related, government managed, whereas tier 2 is individually set up. And so something that is going to be a bombshell in future when we need our money, something that those monies were invested in some of the collapsed asset management companies in the past. Moving forward, what are the stringent measures? These are public perception in respect of tier 2. So I want to get your thought about that.
I'm happy you said it's a perception, because that is not that's not the reality. None of the asset management companies that collapsed had any of the pension funds. Similarly, ours is even more strict, because our investment guidelines come straight from the regulator, and the regulator also gives us allocations as to where we can invest these funds. And as I said earlier on, the corporate trustee cannot decide outside the investment guidelines to invest the funds. In fact, to be honest, Rana, the challenge that we are having is that areas we even invest is becoming a challenge. Our assets has grown, dramatically. And so I can say that the investments are quite safe. Yes, what probably happened was that some of these investments were done in these collective investment schemes, which of course the guidelines allows us. Now with the collective investment schemes, because of the downturn of the economy, and there was this mark-to-market value, which of course affected some of the investments. But it is not the doing of the corporate trustee to say I'm going to invest in the very poor or not invest well. It was a general thing that hit all of us, and then we are all going through it. What I would say is that one of the good things about pension funds is that because pension funds are long-term funds, it has the ability to resist, very resilient to such turbulences. We are not going to go through this till the kingdom come. Things are going to change. And another good thing about pensions is that we have what we call contract of generations, especially in the case of SNITs. The defined benefit scheme has a very good solidarity, which we call contract of generations. So for example, if you look at SNIT now, of course, I'm no more there, but I don't think the data has changed so much. You notice that those of us contributing to SNIT are far more than those who are going on pension. And so even the monthly contributions that SNIT collects is able to pay pensions and not necessarily even relying on their investment. Something similar is happening to us. If I take People's Pension Trust, for example, our average age of our members is 35 years, which means that we have about 25 years for these funds to keep on growing. And that is why within a short time, the pension fund has grown so much that, if you take it out of the system, there will be a problem. So I can assure everybody that by the investment guidelines, everything is being done properly. And that is why I said earlier on that the architecture in the industry is a very good one, because you can't play games with it.
Okay. Thank you very much, Mr. Polly. You mentioned you were part of the team that promoted the informal sector pension. There are a lot of people in Abosokai who are not paying or are not contributing to pension. What advice do you have for self-employed persons and those in the informal sector?
Yeah, the challenge we have is that there's a misconception, which the the good thing I'll say is that gradually people are coming to understand. There's always been a misconception that those in the informal sector do not go on retirement. Even if they go on retirement, they rely on their family, their children to take care of them. And that is a misconception. I say it's a misconception because no matter what you do, a point will come that you cannot have the strength, ability to be going up and down. And I can tell you for a fact that we have visited Abosokan several times, and when we go, they tell us, oh, have you seen this man who is asking for 20 cedis? He used to be a huge man here. He had a lot of stores here when I came here. And so that should tell us that, look, whether you like it or not, a time will come that you cannot work again. I call it, I'm a Bob Marley fan, so I call it a natural mistake. I say 3 things are happening now that all of us should take note of. Number one, globally, we are aging. Don't be deceived by what you see on the walls gone so soon and think that we are not aging. We are aging. That is why even in the wisdom of the law, they push the life expectancy from 72 to 75. And I tell people that if you want to see that Ghanaians are taking good care of their health, 5 a.m., go and stand by your door and see some of people are going on jogging or going on for a walk. I mean, now when a Ghanaian is buying food, he says, Madam, mentor oil, I don't like too much oil. Previously, we felt oil was good for us. Now we are taking good care of our health. I mean, science is improving. So the question is that if we are doing all this, what it means is that we are going to grow even older. That is one. Number two, standard of living globally is increasing. And so if you are going to grow older and standard of living is increasing, then you need money. And then finally, the African or Ghanaian family support is not like it used to be. It is no more. And that is why if you combine these three and you don't have prepare for the future, which I call it pension, then old age poverty is a clear and present danger. And so we keep educating the informal sector. States are even coming to it, and we are in the market. We are talking to them and educating. The challenge has been the education. But interestingly, when you meet them and you explain some of these things to them, they get the realization that yes, this is something that we must do. And so I think that education, we can't stop now. We need to keep talking about education, pension. Thank you.
Theo, let me just add a little bit to that. It has become very clear to us, very clear, and it's a fact out there. The Ghanaian economy is driven more from the informal economy than the formal economy. I'm sure before you got to your office, you drove by the Yango driver, the Uber driver, the electrician in the kiosk. You drove by all those people, you know, the Abosiokan area, all before you got to your office. Now, all these people account for a lot more of our economy than the formal sector. And so it's very important to include them in there. Number-wise, they are there. And quantum-wise, in terms of what they generate, they are also quite significant. That's why we've reached out to them. And remember I said the highest paid pensioner is 169,000 Ghana cedis a month. He's from the informal sector.
That's quite interesting to know.
Yeah. So it's a very, very important area. We're going back to them. We're educating them. TUC's just got back to us. They are very eager to go on the road with us to help propagate this news and this story and get them to come on board. They also deserve superannuation. They also deserve pension, and they are eligible. Some are getting it now. In fact, when we went on the road recently, we were actually accosted by a few of them who were over 45 because they were not happy that we're now coming to tell them that. They claim you knew all of this and you're now coming to tell us. Why didn't you come to tell us earlier? Because people are now starting to understand. And last but not the least, this pension scheme is one of the most generous pension schemes in the world. And this is from a global institution that has some oversight on this scheme. And they concluded that we are one of the most generous. In fact, maybe down the line when we are reforming, we have to tighten them a little bit. It's just too generous. So we're trying to get all members to come on and also partake on this pension scheme. They also deserve pension like anyone. And it's part of the SDG that we are trying to get. poverty reduction.
Very glad to hear that the SGD is driving this as well. We're running against time, so I'll take your final remarks. I'll take Mr. Ado's final remarks. Then I'll go to Mr. Polly.
Thank you. Colleagues, thank you all so much for giving us the time to tell you about SNIT. We would like to let you know that we think every worker, including you yourself on the panel and on this platform, deserve pension. Every worker deserves pension. So we ask that you kindly enroll all workers and comply and get them onto the scheme so that at retirement, they will also have the pensions to live on and live by. And also they will live a worthy life post-pension and not be as terrible as we've seen others do. And in so doing, I want you to understand that SNIT is here to work with you. We are not adversarial as you think, far from that. If you have any challenges at all, please call us or walk by the nearest branch and tell us your issues. We'll work with you to resolve it so that you be in compliance and all will be well and you'll be a good corporate citizen. Thank you.
Right, Mr. Ado. Mr. Polly.
Well, so I'm very grateful we have had this opportunity to talk about pensions. It's one of my favorite conversations apart from football. And then we at People's Pension Trust are saying that we offer a personal pension scheme that is very flexible. In fact, you have the opportunity to access part of your funds even before you go on pension. So in as much as we are doing tier 2, we are doing a personal pension scheme that is very, very flexible, that is very technological driven. And so, for example, you can sign on using a USSD. And apart from that, one of the things we at People's Pension Trust is doing is to educate everybody, not just our clientele base, on how to plan for retirement. So if you invite us, we are ready to come, be it an association, a church, employees, welfare groups. You come and educate people on how to plan for their retirement. A lot of the time, you know, today, all we've talked about is the financial aspect of retirement. It's quite about the financial aspect. You need your health. We call it health capital. You need your financial capital, your health capital, and your social capital. So don't forget that if you amass all the funds you need in your old age and your health gives up, you spend all the money at the hospital and you don't enjoy it. If you don't have a very good interpersonal skills, you don't have a social network in your old age, where probably there's no peer pressure because probably all your mates are gone, you'll be found wanting. And so we are grateful for this opportunity, and we hope that together you make sure that we reduce old age poverty. Thank you very much.
All right. Thank you, Mr. Polly, for your final remarks. Colleagues on the call, we thank both of them for joining us this morning. We've learned about our compliance obligation in respect of pensions. I want to just recap the most salient ones that are, as far as I'm concerned, I can remember. We have an obligation to contribute towards tier 1, which is 13.5%. That is towards tier 1 pension scheme, and 5.5% that goes to tier 2. So employer's obligation is 13%. Employee's obligation is 5.5%. You are under obligation to remit this amount of money by 14th of the subsequent month. You are also expected to submit your contribution report by the end of the month. If there are changes in circumstances to your business, be proactive and engage SNIT. SNIT understand from Mr. Ado that SNIT is not interested in sending employers to court. So if you have any issue, just contact your branch manager and have a conversation with them, and they can make an arrangement for you if business is quite difficult. We talked about the tier 2 as well. So an employer is expected to appoint an authorized trustee to manage the tier 2 pension contribution. So NPRA has license approved pension trustees, approved pension trustees. So if you don't have one, please, as soon as possible, take steps to have one appointed. So we at the Chamber of UK Chamber of Ghana Chamber of Commerce are pleased to have you. We hope that when we call you another time, you gladly honor our call. I would like to thank my colleagues from the Chamber, Sarah, Immaculata, Jocelyn, and everyone who supported us today in making this a success. Thank you very much and have a nice day.